Hi there, this is Justin Krane, Certified Financial Planner Professional and founder of Krane Financial Solutions. Welcome to Money You Got This. So how can you really live? How? By uniting your business money, your personal money with your life and your business. Word up.
Krane Financial is an SEC-registered investment advisor. However, such registration does not imply a certain level of skill or training, and no inference to the contrary should be made. A copy of our current written disclosure statement discussing our advisory services and fees is available upon request. Information contained herein is for informational and illustrative purposes only, and general in nature. It should not be considered specific financial planning or investment advice, or a recommendation to buy or sell any type of securities or other investment products.
What's up, everybody? This is Justin Krane. Welcome to Money You Got This. This show is brought to you by Krane Financial Solutions. I'm Justin Krane. I'm a certified financial planner professional, say that 10 times fast, and I offer investment management services and act as a fractional CFO to business owners. I'm the author of the book, Money You Got This. It's time to merge your money with your life. You guys ready? All right, let's do this. I'm psyched you're listening to the show. I want to give you this free report, 3 things multimillionaires do to grow their wealth. Just go to coolmoneyshow.com to grab it. That's coolmoneyshow.com to grab it. Thanks. Today, I got someone like we're talking business here. This is legitimate business stuff. Who's with me? Lana Hout. Lana is a business broker and M&A strategic advisor with First Choice Business Brokers from LA. Welcome, Lana. How you doing?
Great. Thanks for having me, Justin.
Awesome. I got more of a bio. Let me just roll with this.
Oh, okay.
Graduating summa cum laude from USC Marshall School of Business with a degree in business administration, concentrating in finance and marketing. Before you got into First Choice Business Brokers, you were an experienced valuation biz development extraordinaire at Duff & Phelps, Deloitte & Touche, and NBC. With an emphasis in media and entertainment. Say again?
That's a mouthful, isn't it?
Totally. And then you were in the media and entertainment sector, right?
Yes. When I worked at Deloitte and Duff, I worked at the entertainment, media, and technology groups. I worked on all industries, but I definitely focused on those. And then that's what kind of led my interest to going and looking and doing business development for NBC.
And what did you do for NBC?
I was focusing on the network E, and so I was doing the business development for them. So when you think about all of their content online, how they can increase their different types of revenue streams, going through and really looking at the business as a platform and how to increase their web presence.
So you went from Deloitte to E?
I went from Duff to Deloitte to E, and then to First Choice.
To Deloitte to E, and then from there?
And then from there, I'm here at First Choice Business Brokers selling businesses.
So where did you learn about valuation? Where did you really cut your teeth in valuation?
Well, honestly, my first take of valuation was when I was in school. I took a finance class, actually took business valuation at USC, and I really liked it. And so then I was like, oh, this concept of doing deals, of buying and selling businesses, that always really intrigued me. And so when I was looking for jobs, I went for that job. And so that's actually how I started my career, was in business valuation. And it was great kind of from a corporate standpoint to learn about business valuation, in a corporate setting. But I really enjoy now working, opening the office of the LA office of First Choice. I get to do the deals, work with the entrepreneurs, really look at their business and help them make that transition to maybe retirement or maybe to another business.
So were you freaking out when you went to First Choice? Were you like, oh my God, I'm going to go off on my own? Because they're a franchisor. Is that right? And you're a franchisee?
Yes, they're a franchisor. I'm a franchisee. I'm lucky enough that one of my best friends from college and I are the ones that run the LA office. So at least I have a friend, a partner in crime, so to speak. And I think it's great. As anybody who's a business owner, it's a lot of work being a business owner. So running my own brokerage, I know the work involved in running a business, and I know the work involved in selling a business. So I definitely could say, it was definitely a leap of faith. But one thing I've learned in working with other entrepreneurs is if you can't bet on yourself, then, there's not really much to bet on. So I definitely took that leap of faith, and it's been amazing so far, and I'm really excited about the future.
That's awesome. Why do you think so many business owners don't bet on themselves? Why do they hold back? What are they missing out on?
You know what? I think it just depends on what stage of life you're in when you take the leap. I think that as we get older, if you're married, if you have kids, all of a sudden it's not necessarily that you don't believe you can do it. It's that you have financial restrictions, right? That's why it's so important to have someone like you in their corner where you can really help them understand what their financial like wherewithal is, right? Because for me, I was still in my like late 20s when I jumped from corporate. And so I'm not married. I don't have children. So I could really take that leap and know that, you know what, if it didn't work out, I could still go get a job and everything would be fine. I think a lot of the times business owners, or people who want to be business owners but maybe have a job are either too comfortable in their job or don't feel like they have the financial ability to take that risk on themselves.
What would you tell someone that is looking to start a business and ultimately sell it?
If you're looking to start a business and ultimately sell it, then you need to be thinking about like, how is a buyer going to view my business? I think a lot of the times people, especially business owners, they put so much blood, sweat, and tears that their business is their baby. And so you don't want to have anyone call your baby ugly, right? Like, so when you guys are thinking about building a business from, the step one, you want to build it in such a way that it's going to be marketable. And, what I mean by that is, have you built infrastructure into your business? A lot of the times the business owners will be, they started it on their own, then they'll bring on people as it grows, but then they'll be the one that has like the key man risk, right? They're the ones that the clients know. They're the ones that everybody goes to. And so they haven't built something that they could successfully transfer over to someone else. And so one thing I would say is make sure that you are not your business. Make sure you have infrastructure, and by infrastructure, I mean managers that you can go on vacation and your business will continue to run. Because if your business can't run without you, how can you sell it to somebody else, right? So that's something I always tell people to do. And also think about making decisions on the best way. You want to make sure your business grows year over year. You want to show a business that is looking healthy from a revenue and profit standpoint. Otherwise, that's not going to be attractive to selling. And then finally, another point I always try to bring up is make sure you have good, clean financials. When you go to sell, if you have your financials in so many different places, it is a mess. So please spend the money on a bookkeeper and an accountant and having someone actually look over everything, because people buy the paper first. And if your paperwork's a mess, how are you going to convince them that that's your value of your business?
All right. So you just dropped like 3 nuggets there. Let's just go back to the first one. Which is, I think a lot of us, when we start out in business, we think we are the business, and we think that we're everything. Like, hey, I'm senior vice president of purchasing. I'm VP of finance. I'm VP of, human resources. Like, we wear all these hats,
right? And
we think that if we're not the ones doing it, then it can't be done the right way. And by the way, I'm so guilty of this. I'm making progress on this. I just made a decision. I think a lot of change comes first with actually making a decision that you're ready and willing to change.
Absolutely.
I don't want my firm to be just me. I now have 2 employees. I'm thinking of bringing on a 3rd. And I just made like an investment of my time and energy for like the past few days, investing in one of my people so that they can do all of this compliance work for me that is brutal as a financial advisor. It's crazy.
Yes.
So I know that I want my business to be, as you would call it, marketable. And I know that I can't do everything myself.
Although you try, don't you?
But sometimes I think I can. And I'm like, oh my God, there you go again.
Yes.
So I just think you make a very, very good point. And it's so simple and we all know it.
Yeah.
But are we really doing it?
Someone once told me, if you had to give yourself an hourly wage, what would that be? And if you're doing something, if you're doing a task that, like, for example, they use a very simple example of running to Staples, right? You need something at Staples. Does it make sense for you to be the person running to Staples, or does it make sense for one of your employees to be running to Staples? And I thought that was like a very interesting example, because I'm like, I could probably pay somebody, minimum wage or, above minimum wage, whatever, to go and run errands or to go and handle paperwork, like you said. And that would be great, right? Like they're happy, they're doing the work, but that's not the best use of my time. And if you really think about how you make money and how you would pay yourself, would you pay somebody, I don't know, $100 an hour to like run to Staples? You wouldn't. And if that's what you think you're paying yourself, it just doesn't make sense. And so I actually think you have to really look at it as like, what's my time worth? And then make sure you're really focusing on tasks that really give you a return on that time.
I love it. Just going off of what's my time worth, I've actually done this calculation with clients of mine, and all I do is I'm like, okay, so let's say you have an 8-hour day, and I'm betting that half of your day is BS and not billable, if you will, right? So let's say you've got 4 hours a day or 5 hours a day where you're working to get paid, or you're just working in the business.
Sure.
We just did some simple math. We did 4 hours a day, 5-6 days a week, depending on what people do. Multiply that by like 11 and a half months ish, or 11 months. And then you can get literally how many hours you're working. Mm-hmm. Then we can take sales, divide by the hours, and you come out with what your hourly rate kind of is.
Yeah.
So I just think that's really interesting that you bring that up. And then let's go a little bit deeper into financials, because you made a really interesting point about, first of all, you want to have clean financials. Like, of course, I love that. I'm not a bookkeeper. I'm a fractional CFO and a CFP. Like, I love clean books. But I want to bring up a point and get your opinion on the fact that when someone buys a business, I often see that they want to see in the P&L that there's an officer salary expense, so that if they hire someone to run the business, or they want to run the business and take a wage, that there's a budget for someone to actually make a salary and not just pull the profits out as their only way to make money.
Mm-hmm.
See that a lot?
Yeah, that is, I mean, definitely, people have to be very careful in terms of when they're looking at your financials. You definitely, if you're running your company, you should be paying yourself out of your company. People want to see that you are actually, there is a spot for somebody, whether it's them or somebody that they're going to hire. A lot of the times though, you'll be surprised how many small business owners don't take an actual salary, and they're just living off of like owner draws. But that ends up causing kind of an issue, because, people want to see that you're making a certain amount of money. It also helps when people are doing due diligence, just really understanding, okay, this is what the business owner is making. This is what the business is making. And if I want to come in and be a buyer, how can I, plug myself into this equation?
Yeah. Do you do any valuation work, or do you bring in someone to do that?
So if someone is going to sell a business, then I will do a market pricing analysis, or like a calculation, if you will, where I will basically look at all their financials, do the analysis, and come up with what I think the business would be worth. If they need something for like legal or tax that would need to hold up in court, then we work with a firm that I refer our clients to at that point.
So you guys do a market valuation, right?
We do a market valuation for the purpose if they're interested in selling their business. Yes.
And that doesn't necessarily mean that that's the price that they're going to get. Can you talk about that?
Yeah. So the market valuation that we give people, it's a range, right? What we're really doing is we're looking at your financials, we're looking at your expenses specifically, and we're seeing which expenses are related to you personally. Like, are you running your car? Are you running your cell phone? What are those personal expenses that we could add back that are not necessarily needed for the business? And then we're getting to a cash flow number. And then usually, depending on the industry that you're in, there's a usual cash flow multiple that we use. In small businesses, that's usually 2 to 3 times as the cash flow increases. Once that cash flow becomes over $1 million, then it goes from maybe like 3 to 4 to 5 times. It just depends on how big that cash flow number is. But in general, if you're a business that's making under $1 million in cash flow, you're looking to multiples of anywhere from 1.5 to 3.5, usually, depending on your specific industry and your specific company. But the thing is that, when we look at your business, we're looking at the trends in revenue and profit. We're looking at, do you have customer concentration? Do you have growth opportunities? Do you have infrastructure? And if you have a lot of the pros, then, the better your business is and the more opportunity that there is, you get on the higher side of the multiple. You might get closer to a 3. And conversely, if you have a lot of issues, you don't have clean books and records, you are the key man, so that you don't have good infrastructure, you're going to get closer and closer to a 2 and below. And so those are just some things for people to think about, is that really I give people a range. Let's say your business, I might tell you, listen, I think your business might be priced between 2 and 2.5 times your cash flow. At that point, I'm just giving you a range. We could get offers under that range. We could get offers over that range, but that's really the realistic range. And I'll tell you, most of the time, the price will fall right in that range.
So when you're talking about cash flow, I think you're referring to EBITDA, but you're making it, it's just a simple term, right?
Yes. Yeah. Depending on the size of the business, another way to call it would be called EBITDA, and you apply an EBITDA multiple. But, the thing is for people to consider is that, like, one of the biggest things, Justin, that people do is they'll compare their company to someone else's and realize that companies are not one size fits all. So just because your competitor got a 3 multiple doesn't necessarily mean that you will. If your competitor had all these amazing customers and they had all these contracts and they didn't have customer concentration, like, these are very custom tailored prices. And also it depends on what the market is and who the buyer is. Are you getting bought by a strategic, or are you getting bought by a financial buyer? They're going to pay you different. So I think the one thing I try to stress with all my business owners is your situation is not like everyone else's situation. And we're going to try to do our best to package it up and get you the best price. But you just have to be mindful that it is a range. And if only I had a crystal ball and could just tell you the exact price your business would go for, then I would be making a lot more money, huh?
So, let's talk about making money, and I want to bring something in, because you have a partner, right?
I do.
What do you do, and what does your partner do? Like, who does what? What are the roles?
So, from the standpoint of running the brokerage, I tend to handle a lot of the marketing aspect of our business, and she handles a lot of the financial the financial aspects of our business. So that's how we handle the administrative roles, if you will. But in terms of what we do, we both work on deals together, and so what we do is most of the clients. If they work with Adriana and I specifically, they get both of us. One of us might take a lead on the project, but ideally that allows us to take on more clientele because there's always someone covering. And so we actually do actual business sales in addition to running the brokerage and managing the agents in our office.
When you say you do business sales, what do you mean by that versus the brokerage part?
Well, being a business broker and being the managing brokers, running the actual business of the brokerage. We're training the agents, we're reviewing their deals, but versus business sales is our actual, our specific deals on businesses that we're selling versus reviewing our agents' work.
So are you training your agents how to go out and get business?
Yes, we train them how to get the business. We train them how to look at all the contracts. We train them even how to value businesses. I mean, we literally have people coming in from different backgrounds, accounting, finance. It could be even recruiting or, financial advisory. And they maybe are looking for a new career and they'll come and join our firm. And we'll teach them everything from A to Z about how to find a seller, how to list the business, how to market it, and how to close it through escrow, the whole thing. We're teaching them. They go through our training program, and we are also there to assist them and review all of their work and make sure everything is going perfect for our clients.
Wow. So you're running the company, if you will. You're running the LA office.
Yes.
You're doing your own deals.
Yes.
You ever have time to go to the grocery store or floss your teeth or something?
You know what?
You're a total flosser. That smile, you're flossing 4 times a day. You're a frequent flosser.
Yes. No, I appreciate that. You know what? Honestly, it's amazing. Sometimes as a business owner, you really just don't feel like there's not enough hours in the day. Yeah. I think a lot of us in growing, we've recently added new people. I'm really trying to, kind of similar to what you said, bring on some more people to help with tasks that just don't need my attention, my full attention, and are not really the best use of my time. I still like to make time to network, to go see my friends and have fun. I think it's always important to have different ways to just enjoy life, right? We're all business owners. And if you're a business owner and you're working hard, it gets to be grueling sometimes. And if you don't have those fun activities, whether it's spending time with your family and your friends, then it really doesn't feel like it's worth it. And so I think when you go into being a business owner, the goal is freedom and the ability to do what you want. And yes, you do have to sacrifice in the beginning, but the goal is there. And slowly but surely, we're just climbing up that mountain.
Yeah, I love it. I want to talk a little bit about, I don't talk about this enough on the show, and I'm going to start doing it, is like your unique selling proposition. And because there's gobs of financial advisors, there's lots of business brokers, but I'm curious, have you thought about what you think your unique selling proposition is? And do you even look at your clients' USP when marketing and valuing and selling their business? Like, why should they get a higher multiple? What is, I just talk to us a little bit about that, what you think yours is and how that works with your clients.
I think that's a really important, that's very important actually in selling businesses. I'm definitely doing that. You have to understand, I might be working with multiple clients in the same industry. So I'll just keep it easy. Let's say I'm working with 4 restaurants, right? Now, maybe they're all different restaurants. Maybe one is a Mexican restaurant, one is a Chinese restaurant, and one is an American food, burgers, fries kind of restaurant. So categorically they're different, but really what are they? The restaurants. Yeah. So when you're marketing them, you can't just say, hey, restaurant and sale in Los Angeles, here's the price and call it a day. Like that's not going to get that client the best price. You have to look and see what's so great about their business. Is it their location? Is it their customer service? Is it their quality of food? Like what is it that's so great about them? And so we definitely make a point in the marketing packages to list out all of their competitive advantages so that a buyer can really understand what is the value they're paying for. In terms of myself, I think I definitely have to think about that because, I'm not the only business broker in town or in the world. And so anytime you're in any business, you have to think about how you're different from your competitors and how clients are going to view you in relation to your competitors when they're choosing a broker. For me, I would say the one thing that I believe strongest in is that I come from professional service background. I worked in very large, very large businesses. And when you come from very large businesses, you have a certain corporate experience, certain financial analysis skills. So I'm really able to leverage my background into helping small business owners. And honestly, for me, there was a hole in the space because if you were a company that was under $10 million in transaction size, investment bankers don't want to work with you because you're too small. But that doesn't mean that you haven't built a good business and don't deserve quality service. And so for me, I will work with businesses sub $1 million and I will work with businesses $25 million. But I'm giving them the same service as I was working on for like the hundreds of millions of dollars. And I think that's really the differentiator. I'm not someone who just decided, woke up one day, got a real estate license and said, I'm going to sell businesses. I actually am providing them with that qualitative and quantitative analysis to make their business sale successful.
I'm pulling out, I love all that, but I'm going to tell you what I think yours is. And I'm
okay.
One of my props. This is the wine mic.
Oh, the wine mic.
Wine mic. I'll tell you, I'm going to talk into the wine mic.
Okay.
I actually think it's your energy.
Oh.
Your energy is insane.
Thank you.
Like, I've watched you on some of your other videos and like, just because I want to get a background on you. And like, I think you have really, really good energy. Oh. And I think what you're trying to do is give this client a super duper cool experience throughout the thing. Because I know you've told this to me, like, it's not like, oh, they just work with you and they sell their business in like 3 hours. It's a lot of work, a lot of back and forth. And I'm just betting that it's your energy and it's the way that you're doing what you're doing in the sense of the relationship with the client, where the client feels like, you know what, Lana totally has my back. That's my read.
Well, I really appreciate that. I mean, I will tell you personally, creating personal relationships with people is something that makes my soul happy. And so like, I wouldn't be in a business of being in this kind of business. It's all based on relationships, similar to yours, right? People have to trust you with their baby, which is for me, their business. And you're right. I don't get to just talk to them for 2 hours and then they disappear. I mean, usually my clients, we have a relationship, our business relationship is at minimum a year. And usually what I hope, and I've been very blessed with the clients that I have, is that they think of me and will come back, in the future to buy something else, sell something else, introduce me to a family member or a friend. So, I never look at it as a sort of like, oh, one and done and I never talk to you again. I really look to build a relationship. And that's really nice of you to say, Justin, because that's something that I really do strive to do, is make my clients feel very comfortable and heard, because I think, this is an emotional process. I mean, selling a business is not just getting a check and walking away. You're usually ending a chapter of your life that you might have been doing for 30, 40 years. So I want to be very sensitive to that and want to make the transition as smooth as possible.
It's interesting that you said the word soul. I was like, wow. Deep.
Yeah. Deep. You know what? People always want to think that when you're in business, that somehow being in business and being a business person, you're not like anything else. Like, either you're the finance person, or, oh, you're the engineer, or, oh, you're the doctor. But, I think that something I am always brought to is that we're just human beings at the end of the day. So I need to put, kind of take off the financial hat when I'm talking to my clients and be like, okay, you're a person and this is your background, and where can we connect? What do we have in common? Do we like the same burger joint? Do we like to, go to watch the same movie? Did you just see the movie premiere? Like, what is it that we have in common? Because I'll tell you, Justin, some of my clients are like, guys that came from the old country that are, they're not very educated, but built really great businesses. And then I have guys who are super polished, guys and gals that are super polished, very educated, went to great schools, who also built successful businesses. But you have to be able to kind of go with the flow with your environment and know which version of yourself needs to show up. And I just mean by that is what part of you is going to connect first with that person.
You nailed it. It's the connection. Can we talk a little bit about, being that I'm a financial guy and I do a gazillion retirement plans, I think in so many of my clients that sell their business or look to monetize it, this number that they're going to sell their business for, I'll call it the after-tax number, net of taxes and all of that. It's a very, very big number because it will determine lots of things: how much they need to save before they sell, where they could live after they sell, how long they'd have to work after they sold, if they could buy the vacation house, like on and on and on. It's a big number. It's a big variable. And I just want to open that up and get your thoughts on people that sell their business. It's their baby. They want it to fund their retirement. Does it always work out that way? Does it have some twists? What's your view of that?
Listen, there's this, just like life, there's always ups, downs, twists, and surprises. I mean, nothing goes exactly the way you think it's going to go. And the one thing that you can do to help ensure that it goes more your way than not is by planning. And I wish that more business owners would come and talk to me a few years before they want to sell, because then I could tell them what I think their business is worth. And if it's not worth what they want, then, they can actively be working to make sure of it. But also talking to people like you. I mean, one of the things I always tell my clients is like, listen, whatever the number is in your head that you need to walk away with, you need to talk to your financial advisor and see what your financial advisor would recommend. Maybe the way you're investing your money, maybe there's different investments. Maybe you could take somewhat of a little bit lower of a price and have less money, but when you invest it, they can get you to the amount that you need. But that's only going to be with planning and thought ahead of time. A lot of the times what happens is they wait till the last minute when, unfortunately, maybe one of the parties is sick, or they have an ailing family member, and now they're like pressured to make a sale happen, and they're not prepared, and therefore they don't get the price they want. So I think that a lot of the times tax planning, talking to your, whether you're talking to your CPA, talking to your financial advisor, and really talking to someone like me who can look at your business and tell you what it's worth today, that's valuable information so you can prepare yourself for the exit and really maximize the money that you get from the deal.
So I want to just summarize a couple of key points that I'm hearing from you, because I was going to ask you this question about what are the mistakes that business owners make when they sell. I'm hearing lack of planning, not clean financials, in the face of their entire business, not being aware of what the trends are that are going to affect the value, maybe too high expenses, not profitable enough, and some other market data factors. But that's kind of what I'm hearing from you. Do I get most of them?
Yeah, you got most of them. I mean, really the thing is what I wish that most buyers and sellers knew and just really kept that in mind, but specifically business owners, is that people buy your business based off of your performance today, not yesterday and not tomorrow. A lot of the times people are like, but this business has so much potential.
Oh yeah.
And that's great. Yeah. Wouldn't you have $1 for every time you heard that, right?
That's Shark Tank. That's why
Yeah. And I always tell people, like, it's really great that your business has potential. A buyer wants to buy a business that has potential, but they're not going to pay you for it. They're going to do the work to realize that potential. So I wish most people would realize that while you've built a great business, they're going to pay for they're going to pay you for the performance today. And, you know, it doesn't matter if your revenue was 5 times what it was 5 years ago. It doesn't matter if it could be 5 times what it is 5 years from now. They're only going to pay for what it is today. And I wish more people really understood that. You know, blood, sweat, and tears doesn't equal the price of your business, and what you owe doesn't equal the price of your business. So if you have debt, like it does, like if you have debt and you have bills, like, and you like, you know, made a bad investment and now you're in the hole, like that doesn't mean your business is worth what it's worth plus your debt. Which you'll be surprised how many people always come to me and they're like, well, I have X amount of debt, so I need the business to cover it. And I'm like, well, it's not worth that. So
that's it's actually interesting you bring that up, because there's a whole like universe of terms for behavior. I will call it behavioral finance, where we make a decision based on some weird concept. Right. And what you're talking about is anchoring on a specific number. It has no bearing on anything except it bears something to you. So if you're like 600,000 on your mortgage, that's your number. It has nothing to do with anything that you want. You know what I mean?
Exactly. No, but they'll say that. They'll say I owe 600 on my mortgage, and I took a business loan out of 200, so my business is worth 800.
Yeah.
And I'm like, your business is and maybe your business is worth 800, but most of the time it's not. People just realize that valuing a business has nothing to do with what's in your bank account, what's not in your bank account, what you owe. It's two separate things. But if you plan, which to me is, Justin, I mean, you must see this a lot. It's amazing to me because you spent maybe, people have spent like 30, 40 years building a business, and then to like not plan for the exit, which is the retirement money, is always so fascinating to me. I'm like, you weren't thinking about this when you were, I don't know, 40 and then 50 and then 60. Like you had 3 decades to like think about your exit, and that this money is going to be used for, I don't know, vacationing or the grandkids or whatever. It's just surprising to me that people don't think about that.
2 more questions and then we'll call it a day, or at least talking points.
Okay.
The first one is, because I've seen this with some of my clients, is there's this issue of at what point do you sell your business when it's growing? It's like if you can time it perfectly to where you're selling it where the last year, 2 or 3 are the best growth years, and you don't think you're going to grow at that rate because of the market or whatever. I've just seen that where the seller has to make a decision as to, I think I can get the most for it now versus just staying and working at it and making the cash flow off of that against the loss and the perks that I'm running through my business versus just selling it and taking the after-tax sale and that's it.
That is a good question. And what I always tell people is, if you're a business owner, for example, the economy has been great for the last few years, businesses have been booming. I'm seeing people's, P&Ls, the revenue is growing year over year at double-digit rates for some of my clients. And what I always tell them when they're asking me, hey, Lana, do you think I should sell, not sell? First of all, it's a personal decision, right? You have to think about what's right for you. But some of the things that I do tell them to consider is, well, okay, let's say, you've been having year over year growth. If you have 3 years of consistent growth, you should, that's great because people are going to look usually at the last 3 to 5 years, but definitely the last 3 and the current year. And if you know that you already have a good pipeline going into the new year, that's great. That's when you really want to sell your business. But specifically when you're talking about, should you try to time it and get out? My thing is, if the market were to go down and your business was to go into a recession, would you be willing to work the next 10 more years to build it back up to then sell it? And if your answer is no, Lana, I'm not willing to go through another recession and then have to build it on up, then you should sell.
Yeah.
If you're like, you know what, Lana, yeah, I'm, if we had another recession, I would stick with it and then I would build it up again, then you should keep it. That's really, to me, the biggest deciding factor. It's like, what do you want out of your life and how do you see the next few years? But I'll tell you, trying to sell your business in a recession, you're going to most definitely get a lower value for your business. And that, that's something that I always tell, the business owners, you can't have it every way. You can't have the best outcome of every scenario ever, right? You have to pick one outcome and base it off of what is known and knowable to you at that time. But really, if you're not willing to go through another recession cycle, you probably should just sell.
Love it. We haven't talked at all, and maybe we touch on a little bit about buying a business.
Mm-hmm.
What's the biggest mistake that you think buyers make? Like what are they not thinking through? Are they just overpaying? Is it the fact that once they buy a business, they don't even really know how to run it, or they're just not ready yet to be an entrepreneur or a CEO? What's a common mistake that the buyers make?
Oh, there's probably a couple, but one is, do not pick an industry that you don't know anything about. Like, I'm so fascinated by buyers who want to get into restaurants, for example.
Yeah.
That's a tough business. You really need to know how to manage people, how to manage food costs. There's so many aspects of that particular business. So one thing I always tell buyers is do not look at businesses that you really have no idea about, that take a lot of skill set and a lot of experience. So that's one. I think second, I would say a lot of the times I see buyers sweating the small stuff. And it's they're so, nitpicky about the little things. They're missing the big picture. The victory is in the ownership. And when you want to be a business owner, you have to be able to make decisions quickly. Okay. Not every little thing needs so much analysis paralysis. And I will see buyers do that. And honestly, if you have a lot of analysis paralysis, that's pretty much a first indication to me that you're not ready to buy a business, let alone be a business owner. Because business owners have to be effective and you have to make decisions. You do need to do due diligence. I'm not saying don't do any due diligence, but you can't be sitting on, every little decision takes you a week, 2, 3 weeks. Business moves. And I think that a lot of the times buyers will also, they'll also not be realistic with what they expect in a business. I always tell buyers, you should know what industry you like. You should know how much money you have. And you should have a clear understanding of the type of buyer you want to of the type of owner you want to be. So do you want a business that you're just absentee and checking in on, or do you want to be an owner operator? And I'm so surprised when I meet buyers, how they haven't even thought of okay, I buy this business, now what? It's have you even thought of what your life will look like now when you run a business versus when you were maybe an employee, or maybe you were doing something different? I think that's really important, is being honest with yourself and having self-awareness about what you're good at, what you're not good at, and picking a business that really maximizes what you're good at first.
Wow. Lana, you're good. I love it.
Thanks.
I hope everyone got a lot of good nuggets from you. And I want people to go to either, whether it's your site or to connect with you. We'll put in the show notes your info and all that, but where can people reach out to you? Where do you want them to connect with you?
Sure. So people can definitely reach out to me through my website, www.bizbrokersla.com. That's our first choice website. You can definitely contact me through that. And you can also contact me on LinkedIn at Lana Hout.
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 Biz, B-I-Z, brokers, BROKERSLA.com.
Yep.
Sweet. Well, it's been great to have you on today. You're amazing. Always love your energy. And everybody, you looking to buy or sell anything, whether it's a cup of coffee or a slice of pizza or a serious business, call Lana. She can help you.
I can definitely. Thank you so much, Justin, for having me.
Have a question? Want to get in touch with us? Need some help and advice with your finances? Just go to coolmoneyshow.com and reach out to us. That's coolmoneyshow.com.
Krane Financial Solutions is an SEC registered investment advisor. However, such registration does not imply a certain level of skill or training, and no inference to the contrary should be made. A copy of our current written disclosure statement discussing our advisory services and fees is available upon request. Information contained herein is for informational and illustrative purposes only and general in nature. It should not be considered specific financial planning or investment advice, or a recommendation to buy or sell any type of securities or other investment products. No investment decision should be made based solely on any information provided herein. We do not provide legal, accounting, or tax services. We recommend that all investors seek out the services of competent professionals in any of the aforementioned areas. Certain information provided has been obtained from third-party sources that we believe reliable. However, it's not been independently verified and is not guaranteed.